Good afternoon. My name is Oliver Bussmann. I'm former CEO of SAP and UBS, and now running my own advisory business out of Switzerland. And it's really a great honor and pleasure to host this panel all about driving innovation inside or in banking, in financial services. This is a topic, that is active and always discussed over the last 10 years, driving innovation, impact, efficiency, and business impact for financial institutions in teaming up with the ecosystem, with startups, with entrepreneurs, with employees, with venture capital and private equity firms from the investor side, and with players like big tech players like, for example, Amazon here. So we have really I have the pleasure here, have such an esteemed panel today covering all the players in the ecosystems, from financial institutions, banks, asset management, to venture capital and a big tech player like Amazon. So to get us more insight how to drive the next maturity level in driving innovation and driving impact for customers, for employees, for the industry. And that's something that I think is fun to watch over the last couple of years. And so that's something we want to tackle for the next 50 minutes. We will have, I think, enough time also for your questions. At the end, I think we have around about 5 minutes. So think about what question you want to address. And so let me start with introducing the panel, and I would like to ask Victoria to introduce yourself, and especially also sharing what's your role driving innovation as part of Bank of New York.
Thanks a lot. Oh, wait a second. Okay. Thanks a lot, Oliver. Good afternoon, everybody, and welcome to our stage. I hope you've been having a great time at the Fintech Festival. My name is Victoria, and I'm the head of innovation for Asia Pacific for Bank of New York. In Bank of New York, we don't own innovation, even though we manage the department. Innovation is democratized, and everybody within the bank can innovate and contribute to innovation. It's about an ecosystem and a collaboration of many departments, many individuals, as well as with clients. So what I do is I try to proliferate this ecosystem and the growth of an innovation mindset internally. But in terms of work, we can define our work in 3 ways. So what we really do is try to solve a problem, try to meet the needs of the client or the bank itself. And by doing that, we either look outside and see if we have, more brilliant people who've solved the problem, or if that's not possible and it's just too North Star, we would look at if it's something we can build. But if we also find some companies and startups that not necessarily a partnership, but aligns with our strategy, we would probably put money on the table as well. So that's basically what I do.
Thank you so much. Sharik from Amazon Pay.
Thanks, Oliver. So my name is Sharik. I lead payments for Amazon across 7 countries in the Middle East and Asia Pacific. I also sit on the board of these companies. My role largely, I kind of summarize as being divinely dissatisfied with whatever is happening and continuously pushing us to think about how to create better experiences for customers. How can it be faster, better, lower cost, more rewarding? Overall, as Amazon, our strategy largely is about creating a rewarding, secure, convenient payment experiences for customers who are shopping on Amazon, and then taking those experiences and offering it to merchants like us, who might also need the same experience that we're building for our customers. So that's largely what our strategy is, and as I said, my role there is to be divinely dissatisfied on all those dimensions, so that I can push us to think a little bit bigger for our customers.
That's great to hear. So, I think at least also very challenging, no? Because everybody is a CIO with a better understanding what's going on. Kampanat, if you introduce yourself, coming from the investor side.
Sure. Thanks, Oliver, and nice to meet you, everyone. My name is John. I'm Managing Director of the KXVC. We are a 100 million USD fund, the part of the Thailand's largest bank. This is my fourth fund already. Prior to this one, I also helped another bank in Thailand set up the two funds before us as well. So out of my decades of experience in corporate ventures, I invest into more than 60 startups, execute 450 million USD before, and creating more than 120 projects between the banks and the fintech and startups. It could be anywhere from, like co-campaign marketing, and the largest one was the JV with the largest tech company in this region, which is Grab. Yeah, and prior to that, I also have the mixed experience in help the fintech company in Thailand expand their business to Vietnam and Indonesia. It's called True Money. We are the part of the Ant Financial Group as well. Yeah.
Sounds like a fantastic track record. Fernando, if you want to continue with what you do at ADIB.
Fantastic. So my name is Fernando. I'm the Chief Digital Officer of Abu Dhabi Islamic Bank. So Abu Dhabi Islamic Bank is one of the largest Islamic banks in the Middle East. Most of our business is in the UAE, but we also have a large business in Egypt. We also have operations in Iraq, in Qatar, also in the UK. So we are Sharia compliant, which actually give us our differentiation. And my role within the bank is to, as a Chief Digital Officer, I always explain that it's twofold. On the one side, we have to make the bank more efficient. We have to make the bank more nimble, more agile. We need to enable growth for our core products as we do financing, as we do classic banking products. We need to make it efficient and nimble. Mm-hmm. And then on the other side, we need to prepare the bank for the future. We actually are exploring here, exploring outside. How can we play on embedded finance? How can we play what is going to be our role when artificial intelligence becomes a reality, which it already is? Mm-hmm. How are we going to be enabling digital assets for our customers? So we look into preparing the bank for the future. So my role is to support the organization, our business, our support functions into being more efficient, more digital, and also looking into how can we enable this for the future for the bank.
Very good. Thank you so much, Fernando. Viju, if you want to continue.
It works. Thank you. Good afternoon, everyone. My name is Viju. I am with a small Boston-based company called Fidelity Investments. Some of you may have heard about. My role there is Head of Fintech Solutions. I work for a unit called the Fidelity Center for Applied Technology, which has been the engine for innovation at Fidelity Investments for the last 25 years. We just completed our 25th year as a unit there. Our responsibility for the firm is to look at a 3, 5, 7-year horizon of the technology changes, the socio-cultural moves that will impact our business. Me personally, I'm involved with engaging with the fintech ecosystem to bring in partners that can drive experiences and benefits for Fidelity's millions of customers. So looking forward to this conversation and certainly engaging with you folks afterwards. Thank you for being here.
Thank you so much, Viju, for the introduction. I think it's a perfect segue into the next topic, how you drive innovation as part of a financial institution, because I think your setup is something special because you have the mission to drive impact on the P&L side. If you maybe share the evolution on the innovation side, because I think there was several phases before, more internal facing, and then now what you do right now, pretty much also external facing.
Absolutely. Mm-hmm. So, in any company, we always say innovation is everybody's business, and that is true, right? Because existing businesses have to keep moving forward. But at Fidelity, we also believe there has to be a spearhead for this innovation. 25 years back, right? Our chairman at that point, a visionary, said, we are a technology company that sells mutual funds. And so he was really forward-looking in terms of that, and he wanted to have the spirit for innovation. For many years, this unit always looked far out. And what that meant is there was great thought leadership, but we were not able to deliver to the business. And about 7 years back, we kind of changed that equation. And we moved from, POCs being our KPI to actual bottom line, right? Can we launch new businesses? So we completely pivoted to running our own small businesses, which go through the hard work of getting regulatory approval, engaging with customers. Therefore, we are not thinking in a vacuum in terms of our innovation and really driving the bottom line. So what this meant for us is earlier, if I spoke to a startup, I love the technology. I have to go to a business partner and try to influence and convince their business partner to engage. Now I can do that on my own with my small business, and then the business comes to me asking, hey, I want that, that looks cool. So that's a paradigm shift for us, and it has really worked, and happy to share more on that.
Very good. Because that's, at the end, what you're describing is a different maturity levels that an internal innovation function is going through from a isolated innovation team far away from the business, then more mixed hybrid, or then really a this P&L impact and responsibility on the bottom line. I think there's something. Fernando, if you look at your current setup, how would you describe the current maturity level or the frameworks that you're using in driving innovation in your part of your bank?
Yeah, so I fully align into what Viju said. If I were to showcase how we operate today, we are probably at this inflection point where, at the beginning, when you set up these programs, the KPIs and how you measure this are the input KPIs. Input KPIs, I mean, how many pilots are doing, how many POCs are you running, and there is come to the point where either you start showing value or you're running out of either engagement or visibility or excitement. So there is this inflection point where you need to start showing value to the business, where the output of these activities, it can be external activities, can be internal innovation, needs to start having an impact on the bottom line and needs to start fully aligning to the business. It can be how much of your revenue is coming from new products that you're bringing out of your programs. How are you improving onboarding? How are you improving funnel conversion? Needs to translate these KPIs entirely into similar KPIs that the business gets for. In that case, you are starting to have a lot more credibility to get more engagement, more funding, more runway to continue to innovate and experiment. So this is where, from ADIB, for example, we are at this inflection point where we're starting to have this maturity level where we pivot from how many things we're doing into how much impact we are having. For example, as an Islamic bank, something that we did recently. So we look out because we are offering the Islamic version of bonds, which are sukuks. Sukuks are the Islamic version of bonds. The minimum amount to invest is $200,000. So not that many of our customers are able to afford this. So we found a model in which you can actually have a fractional sukuk. A fractional sukuk is a smaller version where you can start investing from $1,000 onwards. So which hugely adds a lot of value to our customers because now they can start investing in a Sharia-compliant Islamic way. So this sweet spot of innovation where we demonstrated that we are increasing our AUMs, we are increasing our fee income because we applied innovation that has a bottom line impact to the business. So to your question, I think we're at this inflection point where we are starting to track output and impact rather than POCs and pilots.
Yeah, Victoria.
Just want to comment on that. He's absolutely right. There are a lot of ways to innovate, right? I've been through several types of models and innovating in a bank, but at the end of the day, it's the value you bring, not only to the bank, but also to the clients of the bank, right? At the center of what you do, whatever it is, whatever model, the client has to be that center of that innovation. So in my experience, there are different models, and it has evolved in the last couple of years, right? First, you try to internally disrupt. So some banks will possibly build venture startups, like probably what you're doing in your institution, and try to disrupt the business itself and, create new business model. But there's also the testing and the experimentation where you start small, you don't want to invest in that scale yet, you don't want to change dramatically, and you try the emerging technology and you try what's out there and you do proof points, so to speak. And last but not the least is about being solution-driven, which is probably where we're aligned together, where you actually really identify what is the challenge, what is the problem, what are the clients facing, what is the bank facing, and you try to find a way to solve that and make their life better. But at the end of it, It's still about the client. It's still about bringing value and impact.
Thank you so much for the insight. The key question that I ask myself now, sitting on the boards of banks, asset manager, insurance companies, is the level of regulation. I think I have to say it's really exploded the last couple of years. If I look at the numbers of controls, the frequency to look at these controls, stay up to date, more regulation on new technology like the European AI Act, for example. There's a lot of pressure on you guys to still also to be in compliance with regulatory requirements. So you have the second line and the third line of defense, the risk and audit function behind you. How you balance that from that perspective? Because if you have a very risk-averse organization, that could very limit the output from an innovation point of view. I'd love to hear maybe Victoria or Fernando or Viju, how you deal with that, because it can be very limiting, even having great ideas. It's not that if you have the second or third line part of the innovation life cycle, that can be very challenging.
I think they also have evolved, the second and the third line.
Yeah.
They're beginning to see the value of innovation inside a financial institution. So for me, you don't do innovation on your own. It's a journey you have to do with everybody that has skin in the game. So if I have to make my second line and third line understand, I will make them understand from the beginning so they can see what it is we're trying to bring to the table. So it's about really bringing them along in the journey and not just doing what you need to do and then involving them in the end and saying, okay, this is what we've done, please approve.
So what you're saying also, you help them to grow from their knowledge and understanding how this can is.
So adding to that, right, you start from the beginning. But what I've learned is sometimes you're very excited, you start at the very beginning.
Yeah.
And then it curtails what you can do. And I'll explain why, right? LRC is my partner, but not for the why. They partner for the how and the what. Because if you partner on the why, you come from a very different mindset, and it kind of curtails the possibilities. So that's the way I look at how to deal with this, basically.
Yeah, I can add a little bit on that because I have like second and third line on my back, probably in this set as well. They're walking around anyway. So yeah, in the banks, and yeah, I can add a little color here because maybe I come from the different background. Which is I'm trying to do business here in this region. We have lots of underserved banks and unbanked populations as well. So the risk profile is a little bit different from the developer markets. So it's not so hard to really kind of educate or align the goal with the board or the RC, the risk committees or audit committees as well. But the challenge is that how do we really educate them when project is fail? We have to accept together as well because it's kind of normal for financial institution professionals or the bankers to not really comfortable with the fails because it's models which jeopardize your reputations. So I think it has to balance as well on the PRs or how do you manage your innovation within the team, know when to start, put the KPI or OKR on that, and know when to stop and not speak too loud to the public. So and that does encourage people to take more risks to fail and not so much to really hurt the second and third line. Yeah.
But don't you agree it's a two-way street? Because most innovators, they just innovate without actually being knowledgeable in the risks and the compliance of that particular solution. So some of the concerns, if you really talk to second and third line, is they're concerned about you, the team, right?
Totally,
and if they see that you're not familiar with, let's say, data privacy, then they freak out. So, but if they see you're competent enough to understand that you need to protect the data in doing the solution.
I totally agree with that. So that's why the process before you really launch or roll out the projects, you have to have some certain criteria, the checkbox before that. The process of selecting the project to launch has to have the RCs or the board to really have some comments on that part before really launch a project, even within the sandbox. Yeah.
Fernando, going back to you, how you measure success, etc. It's very important as a bank, have an impact, measurable, and try to avoid failure. But we know all, if you drive innovation, there will be failures because not everything will be a success, etc. So how you deal with that? Because, talking to a lot of banking CEOs, they say, we want to have 100% success with all our innovation cases, etc. But that's not the reality, no? So is that a topic for you, or in your environment, or do you everybody has the same understanding that there is also, we have to accept certain failures?
No, so the concept of failure probably, I don't know, maybe outside of California, but in the Middle East is quite different, at least, right? So there is an element of that where you willingly want to say, yes, we accept failure, but there is a limit to that. There is a limit to that. So first of all, you need to be very aware of what are you trying to validate and how much are you spending on that failure. Because learning and expanding through a pilot or through a program, you can clearly articulate that if you are spending a certain amount of time to learn, that is a good investment. And it's easy to articulate. If you are failing on a multi-million, tens of million program, then it's a different story. So the first thing is on this, how you measure success, as we said earlier, is at the beginning, you typically get, if you launch either an Intrapreneur program or a Fintech program or an innovation program, there is a lot of excitement that you can build around. So you do a town hall, you actually bring people along with you, but that typically fades out after a certain time. So for you to continue to have the credibility to innovate, to continue to get engagement of people, you actually do a contest or a participation. You need to explain what you did, how you did it, because the next time they're going to be taking you accountable.
So it comes down to the selection of the cases at the end, no?
100%.
That drives the success rate, no?
And just one addition to that is once you select a use case, our approach is there's a scan, try, scale, right? So it's important to fail fast and fail cheap if you have to fail. Don't fail after $3 million. That's not good, right? And in large institutions, it's not $3 million. If you do something, it is $30 million. So what we do is really stage this so that at each stage you know the feasibility, you know the desirability, and then you're out there with your pilot customers, and then you have enough friendlies to start, and then take a call, basically. Super. So it's important to fail fast.
Let's zoom out a little bit to bring also the two gentlemen into the discussion. And maybe we start with you, Victoria, because I think you're the good segue into the venture business. Because I think in your previous role, you helped also to scale internal venture.
Yes.
No? And any learnings, any insights that you would like to share?
Okay. At that moment in time, innovation was a trend. It was the flavor of the month for financial institution. So people were more open to having their business disrupted. But in today's world, I think you will agree with this. If you try to build a venture internally in a bank to disrupt the model of the bank, it will be a lot harder. And it will be a lot harder to also scale, or a lot harder to spin that, that venture out. Because the departments and the lines of businesses themselves are trying to also disrupt themselves and innovate. So they will probably challenge you in that venture building, and they will challenge you, why do you need to create this new business model when you can actually just help us disrupt our own model? So just to answer your question, when I was building ventures inside the bank, we have a lot of stage gates. So, like you said, fail fast, cheaply if possible, and that's why you need the stage gates. You need the checkpoint in which where the ventures are heading, in what direction, and it has to remain aligned to where the bank is trying to go as well in strategy.
Mm-hmm. Very good. That leads me to a question to come. Looking at how you drive your venture business, as an ecosystem with fintechs, finding good fintechs, bringing them also close to the banks and financial institutions. So what is the secret sauce to be successful?
Sure. I would say that the first thing is that there was a joke from the West, if you want to kill the startup, throw them to do it with the banks. But actually, I think now it's changed a little bit, because banks kind of learn how to really be innovative and learn how to really work with startup, because the fintechs or even the other consumer-facing apps, they already eat the bank revenues already as we speak. They offer their own payments or lending, investing by themselves, right? For example, like Grab. So banks start to really understand how to really work with fintechs. But the secret sauce would be that, the first is to align the key objective and the focus of the startup and the BU that they're talking to. This is the most important thing because most of the BU under the bank, which is most likely we have too many people in the departments. So let's see if that's the case, the KPI or the OKR align the same as the startup. If they were to trying to minimize the MDRs, or if they were to trying to adjust the scorecard to accept more customer, or they want to do more automations, whatever it is, right? So objective has to align for the startup as well as the BU. Most of the startup, like the fintech especially, most of the time they're trying to work with the bank because having the bank logos in the pitch deck is good. But most of the time, it's not really 100% accurately aligned with the KPI, OKR, that they pitch to the previous investor that they first fund for, right? So being the corporate ventures and trying to connect between two parties, you have to respect the fund and the money they put into the startup from the previous investors as well. Be aware of that. So that is the very first important things, right? 2 is know when to start and when to stop. So yeah, you have starting dates, right? Put the KPI on it and really stop as soon as possible if the project is not going on, right? Lots of the time, fintechs or startups trying to work with the banks, they will get into the never-ending POC loops, right? We try that, we try those, right? Especially for the lending business. Up until we know the X rate or default rate is take up to 2 years, up until you really know, our model is not working, right? There must be the innovative way and the way we're trying to understand if the project is good or bad, stop it as soon as possible, or maybe articulate to other types of the partnerships. And the third thing is very, very important as well is that the trust, because most of the time banks trying to do everything, right? And the committee will say that this fintech we cannibalize our business, but at the end of the day, if you really want to innovate, you have to accept that bank's business or the bank's people sometimes they have blind spot, where the fintech has something to offer to the bank customer. It's about trust as well. You can put them to eat the good food together and enjoy the moments, but still it's about trust. If people trust together, even we have the more strict kind of exclusivity kind of agreements or clause or lawful and lawful on everything, it doesn't matter, right? If no trust, nothing is going to happen. Yeah, that's just my secret sauce.
Yeah, sorry, going back to the innovation point though, right? I think the gates make complete sense, and I think this was maybe what Fernando was referring to as the California attitude a bit, but I think there are times when sometimes unless the failure is at scale, you just don't know if it's actually going to work or not. I think AI is a classic example of that in terms of how much is being invested in the foundational models, for instance. So even if you follow the calibrated approach of trying, testing, and then unlocking, investments at every stage, I think there are certain parts of innovation and technology which just demand a certain scale of investment. Especially from our perspective, I think what moves the needle at this scale that we are at is a little different. And hence, investing a bit ahead of time, even sometimes without some of the initial validation, is sometimes something that we would actually consider, largely because you just don't know until a certain scale of investment. But maybe that's the California piece that Fernando was talking about.
No, but that's a big difference because I worked in high tech with SAP. The mindset is different. It's all about speed. Make failure. If you do failures, do it fast but move. No, banking is there's a different speed. No, and I can imagine that I think because the pressure in the payment industry is huge. Volume is exploding. A lot of players. There's a lot of consolidation, etc. And technology is playing an important role in that business. So how you balance that? Working with financial institutions, because Amazon is working with financial institutions, and on the other side also, how you get closer to those startups and fintechs that maybe can bring a lot of value to Amazon Pay. how you manage that? Because
Yeah, I think that's an interesting question. So we offer payment experiences to our customers, and hence, as by virtue of that, have to work with players across the processing value chain, right? Right from processors to banks to networks. I think on the other side, we also issue, experiences such as credit experiences and products to customers, and that's largely done with partnerships with both fintech players as well as banks. I think the first question that we try and ask ourselves is why? Why would a partner be interested in working with us, right? Of course, there is the scale that Amazon can bring, and there's a bunch of other advantages. But fundamentally, I think for the partnership to work in the long run, it has to make sense from multiple aspects. It has to be strategically aligned. It has to make sense from an economic standpoint. And that's really a large part of our thinking that goes up front before entering into especially long-term relationships. Even after doing that, what we've realized is there is a large part of capability building that has to happen on both sides for a partnership to be successful. And our large focus out there is to build the right technology tools that enable communication to become easier between the two companies, make sure that whatever visibility we have into, let's say, why our transaction's failing, that same visibility and pain is visible to other players so that they can truly partner with us to solve some of those problems. So I think building the right set of capability and tools is the second large focus area for us. I think the third big piece is ensuring that what success looks like is aligned and tracked towards through very clear, actionable metrics. I think it's sometimes you have a high-level understanding and a high-level view of what the world is going to look like. But the reality is, like, cycles change, markets change, and you have to have the right interim mechanisms in place to make sure that you're actually being successful and you're making your partners successful. And I think this formula for us kind of works both for banks as well as for fintech players. Of course, I think there are inherent differences sometimes in the obligations that our partners have, which make them behave in a certain way or work in a certain way, right? But I think being respectful of partners across the entire spectrum, I think is important. And our challenge to ourselves is how do we almost create like an operating system for partners where any partner can plug in and offer services to our customers, and how do we help and enable them? So that's really how we think about it.
So that's super helpful. How you manage that disruption and scale it, no? That's the point at the end, no? To drive this. But I want to go back to you, Kampanat, from a venture perspective, looking at financial institutions. I'd love to hear also your views. You're in the business for many, many years. Do you see a change the way how financial institutions are working with you? Example now from very point to focus on certain business problems to I want to be part of your investment process. I want to get insights about your pipeline. To what are the hot topics that you now demand on the financial institution side that you see? Is it RegTech, for example? Is it more cybersecurity? So this kind of insight I'd love to see. Is there change over the last couple of years, and what are the hot topics right now?
Yeah, for sure. The change a lot from the past many years.
Yeah.
For both like the banks and the regulators as well, and the people around the banking ecosystem, right? They got a little bit younger, and they promote lots of people to be the heads of their departments, which is good things. For the very hot topic from the past year, very recent, I would say that one of that is the embedded finance, because banks know that in order to provide the best services, whether payments or lendings or investing, you have to really get the data from the customer. You have to really know the business customer. Like most of the startup here, many of them trying to get to the ERP system or get into the supplier, all the data really matters. The new types of data, whether it's behaviorals or every alternative data sources, right? All the banks trying to, and the fintechs as well, actually trying to address that and get new customer or maybe trying to increase their revenue per users. So embedded finance is the one I believe lots of the banks and the fintechs as well trying to address too. They have to be the champion in payments or lendings or everything has to be seamless for the customer. Just one click to get the services up onto your apps. So that's the biggest trend that I have seen so far. And besides, it's also about the cybersecurity and also direct tech too. The flood is so big in everywhere, especially the payments, right? And also the corporate governance of the customer. Lots of flaws around the supply chain financings too. So AI could help a lot on that part. Lots of banks, I believe, they're really focusing into trying to adopt the AI in every department, even trying to get the all executive to just learn how to use GPT at this moment. That's happening a lot.
Yeah, and one of the other things we are seeing is there's an effort to improve access. And here access means something different from in the US, right? So in the US, there's this big divide forming between public markets and private markets. And to your point on the bond that had a minimum of 200,000, access to private markets is similar. So a lot of activity happening in that space, and looking for ways to make investing in alternates accessible to the common man. And there's regulation also backing this up. So that's a big trend we are seeing there.
It's definitely
this kind of related, right? So if you look at it fundamentally, payments or credit or any financial services really works on the foundation of customer trust. And I think over the last 5 to 7 years, with the significant change in the fraud landscape and the AML landscape, I think if you do not have the right tools and the right investment to keep up with these trends, and you aren't able to earn customer trust, and that really results in more regulatory actions, because that's what regulators are trying to do. They're trying to protect the ecosystem and they're trying to protect customers. And then it becomes harder to offer great experiences, and then you go into this negative loop and this negative flywheel almost, where customer experiences regress and the entire industry starts going back by 5 to 7 years, right? So I think all of these are just so highly correlated that I think investing in these upfront make a lot of sense.
No, absolutely. And going back to your question, Oliver, about going forward, right? At least what we see with a Middle East angle is all of these relationships will continue to happen. And banks, at least from our side, we are actively looking into getting into the play in all of this, because first of all, from the industry, we're getting dragged into this because of everything going on. From the government point of view, especially in Middle East, governments are even most innovative even than the corporate and the private entities. So you have a fantastic innovation going on in digital assets, fantastic innovation. So we have a chief AI officer in UAE in 2017. So we are being pushed by the government to actually play in this space. So, and we have no intention to try to be an expert and to be upscaling to having all of these different capabilities. So we need to be aware of what's going on. We need to drive as a bank. How can we actually provide a framework to partner with these companies? But if I were to look at where we are today as a Middle East bank versus where we were 3 or 4 years ago, there is a huge change in terms of how the board is willing now to work with companies like this. So to work with companies that actually may have maybe a couple of years old, but they have a good runway for a few years. And it was a no-go, but now the conversation is entirely different. We need to do these things. They are coming to us asking, what are you doing in this space? I'm partnering with these people. This is a good answer.
I love to hear that, but I have to say, because I'm sitting on the board of an Abu Dhabi company, it's all about driven to scale and grow in that region. Is that very specific to a region? Because if I sit in other boards, European ones, it's much more balanced. Now I think I'm spending more in the European boards, more, I would say 70% on operational risk, on controls, on AML, cyber, fraud. That I have to say that's 70-80% of the time. I think that's different in your region. Is that fair to say?
I think it's fair to say there is a lot of ambitions, a lot of ambitions, and a lot of mindset of growth, definitely, which is probably a bit different from the current Western setup, I would say.
Absolutely. It's all about growth, because I think there's a window of opportunity for the region to scale and position. Love to hear your.
Well, it's interesting you're talking about location because I was having a conversation with somebody 2 days ago about location.
Yeah.
And we were saying that there's a lot of nuances when it comes to Asia Pacific, Asia in particular. Here, there's a lot of experimentation, a lot of testing. We have very progressive regulators. We have regulators that are really talking to each other and trying to see what's the future of finance in the region. I actually did a design thinking workshop on that last Monday with the regulators, and it's interesting to see where they're headed. So, it's interesting to say that you're also looking at growth and scale and everything because we were saying like the Middle East is kind of like in between everything else. So we were saying that if you would like to experiment and try something new, you come to Asia. If you want to put guardrails and governance around it, you go to Europe. And if you want to commercialize, you go to North America and, scale that business. And then we had a long conversation in Middle East and say, where does Middle East in that whole circle of innovation? So it will be interesting to see what you think about that view that we were talking about.
On the one side, it's entirely accurate. But the thing is that also, once you actually go one level down, Middle East is the GCC. So you have UAE, you have Saudi, you have Kuwait, you have Qatar. So payments regulations are different, central banks are different. So there is definitely a common spirit of growth and optimism and commercialization. But once you actually enter the market, you need to be very mindful. So we have a large operation in Egypt, we have a large operation in UAE, and we see these differences. But definitely there is a mindset of we need to incorporate new technologies. We are willing to take probably reasonable level of risk versus where we were a few years ago, and this actually is what we're doing. So we launched, for example, ADIB Ventures, which is our Fintech partnership program that is being launched this year. So all of this is definitely happening, but there is a lot of nuances about the fragmentation that you have also in the Middle East as a market.
Yeah. And Sharik, you're based in Bangalore. Do you see a regional difference? Also, looking at the global business of Amazon.
Yeah, definitely. I think, see, it all depends on the headrooms and the problems that are there to solve in each individual country, right? Like, for example, in India, there was a very large percentage of cash transactions. And there's a reason, hence, why the regulators are very accommodative of, solutions which really address that problem. Because like all of us, I think the regulators are also trying to solve a problem. They're trying to solve a problem at a macro scale for that particular country, while, of course, protecting trust and institutions. So I think the kind of problems now that are there in Europe are now probably different than what is there in India, what is there in the Middle East, what is there in Australia. And I think regulatory actions and their willingness to engage on those topics and how to calibrate and how much to push the boundaries really depends on where we are in the journey of solving problems in that country.
Now, we are talking about financial institution, asset servicing, retail banking, corporate banking, and then on the big tech side. If you look at the investment management / asset management, how big is the pressure, the regulatory pressure? I assume it's a little bit less than.
So what's happening there is the theme is hyper-personalization. So earlier, we ask you 5 questions, we put you in a bucket, and we give you a portfolio. But today, it's a portfolio for you, and for me.
Yeah.
How do you hyper-personalize? You use AI. And that comes with its own questions. Is there bias in the model? Are you following the rules? And so that is the current battle or discussion around in that space that we are dealing with. And then, of course, we have just come past the whole crypto conversation. And that's in a good place, hopefully better after the results day before, but to be seen.
Okay, super. So now let's move on to your questions. I think we got already 2. So feel free to submit your question on your mobile app. Let me start with the first one. Is how should I pursue my manager to execute an investment without being aware of cost effectiveness? That's a good one, because I think if I listen to you guys, it's all about demonstrating there's a at least mini small business case. Is that?
Yeah, I can take
They're making me answer the question. Okay, it's how do you pursue, right? Convince your management to make that investment
Without,
Without-
talking about cost.
without talking about costs. At the end of the day, why are you doing it?
Yeah.
What is the reason and what is the end game for doing that particular investment? Does it align with the company's strategy? What is the impact and the purpose of doing it? Does it really help and make your clients' lives better? It starts with the purpose, right? Because cost is cost, and there will always be costs when you innovate. That's not something you can avoid. You cannot do something dramatic and not put money on the table. But it's about how do you make your management see that this is a good idea?
Yeah. No, that's a fair point. At the end, you apply to be like a portfolio and investment manager. No? So there are gates that you have to go through, and there's no, because at the end it's maximizing your available resources and capital. No?
Yeah.
It's not just about good idea.
Yeah.
Sorry, it's not just about good idea. It's
Yeah.
the value
Yeah.
of this
Yeah,
particular
absolutely.
idea.
And as an innovator, it's not enough to have a good idea. You should have the skills to convince people, right? You're like a founder, and you have to build that skill as an individual. So.
I think sometimes, we kind of refer to the word innovation very, very broadly, right? But innovation is also about operating under certain guardrails and in a circle, right? So, of course, at Amazon, we could make customers very happy by giving everything for free, right? But that's not really what innovation is. Innovation is solving the constraints. It's solving, I can either give great delivery experience or I can lower prices for customers. The innovation is, can you do both? And how do you do both?
Yeah.
That's the hard part. And that's why innovation is so hard, because you have to solve for the constraints. Of course, there are times when you don't know. And that's okay. That's the journey of going on an exploration where you're not sure. But there are going to be times, and there's going to be a timeline and patience towards that question, right?
Yeah.
But at some point of time, you would know.
Yeah. Very good. Let's go to the next question. Respect to regulatory and compliance, as expected. How do you convince internal regulatory teams and senior management to allow experimentation when they think innovation is fluffy and prefer not to try anything new? That's a good one.
I'll give it a go.
Yeah.
So if I will give a pragmatic example from our side. So when we set up our fintech and experimentation framework, we went to every department. We talked to all of them.
Yeah.
And we were very open that at the end of the day, this is a sort of a VC type of approach in which a few things will work and a few things will not. And hopefully at the end, you should having outsized returns into those things which are working, compensating for the other ones. And bringing them along the journey, right? So this is not a one-off fluffy thing that you do. This is part of a wider ambition that you have for the organization. So we're going back to your point. You have to be able to sell this as an ambition that you have as a group, as a bank, as an organization. And every initiative is part of a wider equation. And a few of the things will be small things like sending an emoji icon through a payment. A few other things will be a full embedded finance balance sheet play. And all of this is going to be balanced out at the end, hopefully, if you have a solid framework to measure the output, right? And a few things will work, and a few things will not, but they should be feel part of the journey strategically as part of the organization, right?
And one other thing is try to get the voice of the customer in,
Yeah.
either existing or prospective.
That's a very good point.
I can add a little bit on that part, just from another perspective, because I think innovators, right? Like all of us here, and many of us in this stage, I guess it's a natural process selections as well, where if you really pitch, if you're a good pitcher, if you're know really how to sell, but the listener really not listen, is commonly, especially in this region, people will move to other organizations anyway. So what's going to happen is that you can try at another organization too. That's my takes. Where in Thailand especially, we see the clear trends of the talents who really know how to innovate, move to the few organizations who really open for that too.
Yeah.
So if you cannot sell, try other companies.
Good point.
Yeah.
So this brings me to our end of our session and panel discussion, because I think we could go on for hours, because we have the right mix here, a right mix of from a financial institution perspective, capital, from a big tech perspective. I think it's a fantastic topic. I think now the takeaways for me is it's part of your day-to-day management DNA. Because if I look at the IT budget, it's exploding. There's a lot of investors coming in, try to understand the fragmentation and try to automate this. And the way how we tackle innovation has changed. It's much more sophisticated, more bottom line impact, managing different stakeholders from second line, third line, business involvement, and try to real impact at the end. And I'm working also with the investor and the startup community in a way that there's a win-win for all of us. No? And I believe in that. So that's a fascinating topic. I think that will continue, will evolve, and also more mature. And I want to thank you for all your insights, for this very engaging discussion, and ask the auditorium give them a big round of applause. Thank you so much. That was fun.